As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ambar Singhania from Asian Market Securities. Thank you, and over to you, Mr. Singhania.
Thank you, Nirav. Good afternoon, everyone. On behalf of Asian Market Securities, I welcome you all for Q1FY22 earnings conference call of Sadbhav Engineering Limited and Sadbhav Infrastructure Projects Limited. We have with us today Mr. Nitin Patel, ED and Chief Financial Officer of Sadbhav Engineering Limited, representing the company along with their team. We shall have a quick update from the management on the results and other updates. Then we can proceed to the Q&A session. Over to you, Nitin bhai.
Thank you very much, Ambar bhai. Good evening, everyone. On behalf of Sadbhav Group, I welcome all of you for earnings call for the quarter ended 30th June 2021 of Sadbhav Engineering and Sadbhav Infrastructure. We apologize that due to the certain emergency exigencies, Mr. Vasisht Patel has to travel, so he will not be able to join for today's call. So just to start with the numbers and everything. So before that, I would like to go through how the asset monetization plan has taken place. Number two, what the debt profile, how it has got changed, what is the current debt profile and what the company is basically planning, and so far as the debt deleveraging of the balance sheet, and also to basically ramp up the working capital at the group level for the smooth and the incremental execution. So we all know that since last 1.5 to 2 years, the completed the deleveraging process and the monetization of the asset is going on. So as a first step, company had hived off 8 BOT projects in March 20, out of which the company has realized roughly around 2,360 crore of the equity value. Apart from that, in the Q1 of the current year, the company had sold basically the 70% of the units held by the group in Infravit Trust, and also raised the long-term funds in form of the NCD from the long-term investors. All put together some 991 crores, and the cash flow has been the inflow has been made in the group level. So post that, actually, I would like to mention here that today currently we are sitting on a standalone debt of SEL of around 1144 crores, and SIPL is 550 crores actually. So this is the debt position on a standalone basis in both the companies as a group level. So now, if I see that how the plan and how it will span actually over the next 6 to 12 months. Yesterday, we all know that the announcement has been made by the company for the divestment of its largest asset of the group, that is the Maharashtra border check post, and which will fetch the net equity of 550 crore within next 4 to 6 weeks actually. The company has also decided to monetize Ahmedabad Ring Road and 4 HAM assets, the 3 which we already completed and 4th one is Jodhpur Ring Road. So for which the affirmative steps has already been taken, and which according to the rough assessment we are expecting it to fetch around 550 to 600 crores of the further equity in the group level within the time span what I have mentioned right now. So this monetization is predominantly for the purpose of deleveraging the balance sheet as well as to provide the enough cushion to the working capital so as to ramp up the execution works of the company level. Apart from this, the company has an outstanding equity investment of 780 crores, including Gadag project which is held in Sadbhav Engineering. That equity investment has already been made. And so except for Gadag, the entire equity investment in all the hybrid annuity projects has been completed by the group actually. And also, company holds 2.5% of the units of the InInfraVid Trust, which, according to our assessment, may realize around 160 to 180 crores based on the transaction what we did recently. The Sadbhav Engineering, apart from this, the Sadbhav Engineering also held the arbitration award in hand, which has already been received to the tune of 350 crore. Okay, and so all put together, if we see that there is enough cushion, what we have mentioned, that is available within the group level so far as the deleveraging of balance sheet is concerned, and also to infuse basically the cushion for the working capital. Okay, and so according to us actually, and the company and management is committed and focus basically to complete this transaction so as to address the concerns of the various stakeholders and build a strong base for the next growth phase of the business cycle actually. So that is what basically we are planning. Now, basically, let me begin with the financial numbers at SEL and SIPL. First, we will go through the SEL numbers. Post that, we will go for the SIPL. In SEL, the income from operations for the current quarter stood at rupees 263 crores as compared to corresponding quarter of rupees 230 crores. EBITDA for the current quarter stood at 24 crores as compared to 19 crore in the corresponding quarter of the previous year. The net loss for the current quarter stood at rupees 16.86 crore as against the net loss of 26.58 crore in the corresponding quarter of the previous year. The segment-wide revenue breakup for the quarter is already mentioned in the media release. The gross standalone debt as on 31st March 2021 was rupees 1210 crores, which has came down to 1144 crores as on 30th June 21, which shows the reduction of 65 crores. The order book as on 30th June 21 stands at around 9,110 crores. The segment-wide order book has been provided in the media release. Now, starting with the SIPL financials, the standalone business, the revenue from operations for the current quarter ending 30th June 21 stood at 32.65 crores as compared to corresponding quarter stood at rupees 48.84 crores. The finance cost for the current quarter has remained at 40.93 crores as compared to the corresponding quarter, which remained at 26.69 crores. In the current quarter ending 30th June 21, we have booked the loss after tax of rupees 64.35 crores, which includes the exceptional item loss of 62.21 crores against the profit after tax of 6.50 crores in the corresponding quarter. In the toll collection segment, for Ahmedabad Ring Road, we have seen the toll collection revenue in Q1FY22 was 23.62 crores as compared to Q1FY20 at rupees 13.50 crores. This is because of the pandemic and closure of the toll for a certain period of time. And similarly, in the Maharashtra border checkpost, the Q1 of the FY22, it was 71.49 crores as compared to Q1 FY21 at rupees 22.82 crores. The toll collection for Rohtak Panipat and Rohtak Hisar project have been suspended since December 25, 2020 due to the farmers' agitation in the state of Haryana and Punjab. Since toll suspensions remained for more than 180 days, this has triggered the force majeure event and because of this, the final termination notice has been issued to NHAI for Rohtak Panipat project, and intent to terminate notice has been issued for Rohtak Hisar project. So SIPL has a current outstanding order book of around 3,900 crores excluding GST, including orders of InInfraVid Trust for the 8 SPVs which has already been hived off actually. The revenue has been started to flow from this now, and the current quarter revenue for 37.51 crore have been booked for the O&M business. Apart from this, the 3 HAM projects where we have already received the provisional completion certificate, we are expecting additional 21 crore basically of the revenue of the O&M in this current fiscal. The consolidated date of operational SPVs as on 30th June 2021 is rupees 3,042 crores, including Ahmedabad Ring Road, Maharashtra Border Checkpost, Rohtak Panipat, and Rohtak Hisar. The consolidated as on 30th June 2021 for HAM under construction SPVs is around 2,262 crores and standalone debt is around 887 crores, which includes the loan from SEL of rupees 337 crores, so making an external debt of 550 crore in SIPL standalone, which we have discussed earlier. So here I would like to give the further brief and the details of the breakup of the debt. So actually, if you see the four operational SPVs, the debt outstanding, the Ahmedabad Ring Road outstanding debt is around 87 crores. Maharashtra Border Checkpost is 1130 crores. Rohtak Panipat is 838 crores. And in Rohtak Hisar, 988 crore rupees. So this is the breakup of 3,042. So post the completion of this Maharashtra Border Checkpost and the termination of Rohtak Panipat and Rohtak Hisar, and also the Ahmedabad Ring Road, which we are expecting to complete the transaction in near future. So we expect that the entire 3,042 crore of the debt will go out actually from the balance sheet of the company with in the near future, because the transaction and basically the required action has already been taken so far as these four operational SPV is concerned. So apart from the HAM assets, the debt of 2,262 crores which I have just mentioned, out of that 1,029 crore belongs to three HAM assets, correspondingly Bhavnagar, Sadbhav Bhavnagar 316 crore, Udaipur 423 crore, and Rudrapur 290 crore. So this 1,029 crore is supported with the annuity which is flowing in the system from all the three basically projects from NHAI. So if we take out this 1,029, the remaining debt for the HAM assets remains 1,233 crore. Out of these, two projects, Una and the BRT, for which the provisional completion certificate has already been recommended, and we are expecting to get basically the formal approval by the authority before end of this month. And also the annuity will also start flowing in both the projects. So the debt of 655 belongs to these two SPV. So only the 578 crore of the debt will remain for the HAM projects which are under construction, which is supported by the project basically cost itself. So this is how the entire SIPL and the group level the debt profile will span. So that is what basically would like to mention here on the floor. Now coming to the under construction projects, the status of the major projects is as under. So Bhavnagar Talaja, as updated earlier, we have received the PCOD for 34 kilometers out of the total length of 48 kilometers with effect from 28 February 2020. And also we have received two proportionate annuity from NHAI, and another annuity amount is getting due by the end of current month. So presently the 86% of the work has been completed in the project. The Udaipur bypass, we have received the PCOD for 18 kilometers out of the total length of 23 kilometers with effect from 31st July 20. We have also received the first annuity in the project, and also the second is also due basically in the current month. The 94% of the work has been completed in this project. The Rampur Katgodam Package 1, the provisional completion certificate has been issued by the authority with effect from October 2019 for 31 kilometers, and we have already received the three proportionate annuities in the project. 77% of the project work has been completed in the project. The BRT Tiger Reserves project, the PCOD has been recommended by NHAI, and as I have mentioned, we will be getting the formal communication before the end of this month. This PCOD is also recommended with effect from December 2020 for 75% of the project length, and we have already achieved the 89% of the completion in the project. The Una Kodinar, the PCOD has been recommended by NHAI with effect from December 2019 for 20.69 kilometers. The 69% work has been completed so far in the project. The Rampur Katgodam Package 2, we expect to receive PCOD by end of September 2021, and also the recommendation so far has been made by the authority with effect from October 2019 for 20 kilometers of the project length. Waranga Mahagaon, 72% work has been completed. Jodhpur Ring Road, 32% work is completed. Team to Ankleshwar, 16% work is completed. Gadak to Honali, 8% work is completed. Lucknow Ring Road, 47% work is completed. And Ahmedabad Rajkot, 42% work is completed. Mumbai Nagpur, 32% work has been completed so far. Ahmedabad Dholera project, we are under process of obtaining appointed date in the project. Now, from above, it can be seen that we have received the PCOD in 5 HAM projects, including recommendation from NHA in 2 projects. And another 2 projects we are expecting to receive PCOD in the current Q3 of the FY22, and 3 more HAM projects shall achieve the PCOD in the FY23. On the bidding activity, NHA has called the bid for 8 EPC projects as of now for 6,900 crores, for which the bids are to be submitted before end of August. And projects worth 5,900 crores for which bids has already been submitted by the company, and we are awaiting the results for the same. Now, I would like to provide the update about the arbitration awards, basically, what is the status. So in Rohtak Panipat, the outstanding amount of 115 crore for which the award has already been received. This is including the interest thereon. The matter is pending at the Delhi High Court, and hearing of the court where basically has been shifted. But however, the NHAI has already initiated the process of conciliation of this arbitration award, and we are expecting to settle this within 3 to 4 months actually. Apart from this, we have lodged a claim of 1,706 crore, which we have also discussed during our previous calls, pertaining to the Rohtak Panipat for alternate route, which is constructed by the Haryana State Government and NHAI. And this matter has also been now, NHAI has decided to settle under the conciliation process. And the process, along with to settle the award, what we already been received, that is undergoing on. So we are expecting that this should be completed within 3 to 4 months actually. So that is what we are planning to complete so far as Rohtak Panipat is concerned. Apart from this, the Mumbai Nasik, we have received an unanimous award of 192 crore in our favor. And the interest thereon till date is 60 crores, making it approximately 252 crores. Out of the same, the 72% belongs to Sadbhav Engineering. And this matter obviously is pending there the High Court level. However, we are in the process of reconciling the same, or also we may basically opt for basically submission of the required bank guarantee as per the Niti Aayog policy. So this may basically be take decision within a couple of months. So this is what basically so far as the overall results group and the debt profile what we have mentioned. So with this, we complete our opening remark. Thank you very much for listening to us. Now we may start the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Mohit Kumar from BM Capital Advisors. Please go ahead.
Hello. Yeah. Good evening, sir.
Good evening.
Two questions on my side. So first is on the deal with Adani, where you send the Maharashtra, where you sold the Maharashtra border check post. So is there any upside left in case there is some extension granted to us by the government for extension of the toll? Given that there was a lot of delay in getting the toll started for the border check post. And the related question is that are all the border checkposts now being tolled, or still there are some 4 or 5 remaining?
Fine. See, to give the answer to your first question, see, this is the value which is currently we are going to get for the transfer of the ownership. So as per the terms, basically we had a sharing mechanism so far as all the variation and claim is concerned. So whatever will come basically government, either they may give in cash or they may give in terms of the increase in the concession period. So that will come in addition to the the consideration what we have stated here. So this is first point. And second point, with regard to the operationalization, out of the 23, the 18 are already operational. The 5 are basically under various stages. It is under approval from the government for issuance of the GR, basically gazette notification. So now we are expecting that this should be completed very soon.
Okay. Secondly, on this standalone debt, external debt, and SIP external debt, if I get the number right, it's 1150 crore and 550 crore. Is the number right?
1144 crore is the debt outstanding as of 30th June in Sadbhav Engineering standalone, and 550 crore is a standalone in Sadbhav Infrastructure.
Understood, sir. So how do you see this, this changing once we have all this liquidity, all this money coming from the, let's say, Ahmedabad Ring Road, or let's say after Adani transaction? How do you think this will end up, let's say, by September or December 21?
As we are already seeing that the post the completion of these 8 assets, I can say that as a consolidated and a standalone. See, on a standalone also, the debt which was earlier around 2,800 crore, that we have brought down to basically 1,700 crore post the completion of the monetization of the 8 assets, and also the recent basically the monetization of the in-infra units. So that is one part. So apart from that, there are the various transactions. As I have mentioned that this Maharashtra border checkpost, Ahmedabad Ring Road, 3 HAM, also the 2.5% of the units of the trust, and also basically the proceeds of the arbitration, and the other 7 HAM projects where we have already invested 780 crore of the equity. So the most ballpark we can say that almost 50% we can utilize to basically reduce the deal rate, the balance sheet, and remaining will be available within the system for the purpose of to build the cushion in working capital and also to bring the growth capital within the system.
And lastly, sir, on the various under construction HAM projects, are we receiving disbursement from the banks? Especially I'm talking about the Sadbhav Jodhpur, Sadbhav Kim, Sadbhav Kadak.
Yes, see, ultimately I can say that the Una, then this Varanga Mahagaon and the Rudrapur package 1, 2, where basically the progress is happening, there obviously we are getting it. Except for Jodhpur Ring Road, as we have earlier mentioned, that we are in the process of basically getting it financially closed actually, and also or otherwise to make some alternate arrangement. So other than that, basically rest of the SPVs it has been completely tied up, and there is no other issue.
There is no other issue in getting the money wherever the financial closure happen. Is that understanding right?
Yes. There is no issue at all. Right.
Understood. So thank you, sir, and all the best. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Parikshit Kandapal from HDFC Securities. Please go ahead.
Hi, Nitin bhai. Congratulations on the deal closure. So my first question is, in all these 10 HAM assets, so what is the total equity requirement and how much is pending?
You mean to say the HAM assets?
Yeah, the total HAM assets, including Himari. So how much is the total equity investment and how much is pending? So how much is the total equity which you have to invest and how much is pending?
In HAM, actually, all the HAM assets and SIPL, the 100% of the equity infusion has been made so far. So there is no basically the outstanding equity infusion required in HAM assets. in SIPL. Only in Gadag Honali, we have already, out of the 108 crore, we have already infused some around 36 crore rupees. The balance only the remaining in Gadag Honali, which is in Sadbhav Engineering.
Yeah. So the total is how much? This 9 HAM assets is total how much is invested in SIPL?
All put together around the 1,200 odd crore basically of the equity has been infused in all the HAM assets.
Including Gadag Honali, right?
No, nine assets, excluding Gadag Honali.
Okay, 1,200 crores has been invested, excluding the Gadag Honali. And against this, we have about 550 crores of external debt, which is basically the NCD from which we have raised, right?
Can you please repeat it, please?
I'm saying against this 1,200 crores of equity which we have invested, we have about 550 crores of external debt lying in the SIPL standalone, right?
Yes. The 550 crore is the external debt in SIPL standalone. Correct.
So this NCD is having a secured, in a sense, it is secured against the equity invested in the HAM assets.
Parikshit, I am not able to listen. Can you please repeat it?
One second. I was saying that this 550 crores is basically the underlying security is the HAM assets investments which you have done, about 1,200 crores, right? So once you monetize that,
the underlying security is there unencumbered basically the shares. So obviously, as and when, as I have mentioned that as and when it will got monetized, so part will be utilized for the reduction of the debt, and also the part will be available at for the working capital requirement and the incremental capital. What is that?
Okay. And this ARIL is, you said ARIL plus 3 HAM projects you're looking to monetize. So that is going to the CPKIB platform only, or like is there any other plans to monetize ARIL? Because ARIL being a state project, is there any change in thought process from the investor or from the whether this can go to the platform?
Ultimately, obviously, our view is that wherever we can get the maximum number, that should be our priority, and who can basically also complete the process within the time frame. So obviously, with the platform, we have already entered the SPA so far as ARIL is concerned. So according to our understanding, they will be also very faster. Now the process has already been started. So we expect that this should also be completed very soon.
Okay. So my second question is on the EPC business. So EPC business has somehow not managed to scale up despite such a strong order book. So, and we have earlier indicated that we could reach somewhere about 10 crore per day kind of execution, which could take about 900 crores of run rate on a quarterly basis. Now we are being lagging behind in terms of execution, and this could also trigger an event from the client side that there has been a delay. So potentially there could be some adverse impact on the damages which the client might seek. So if you can give some sense on how do you see this run rate now since you have liquidity on your side, how do you see the ramp up in the execution next few months? When do we expect to reach that 10 crore number now on a more realistic basis given the liquidity and asset monetization plans have crystallized and we have inflows coming in? So when do you think that 10 crore number could be potentially possible per day kind of a number for us?
First of all, I would like to mention here obviously that these transactions which we have concluded basically yesterday, so this will have a very good decent basically uptick so far as the ramp up of the execution is concerned. And back of the same, as I have mentioned, that the process for another monetization is already going on. So what our view is that from Q3 onwards, definitely we will see the decent growth so far as the actual execution is concerned, and this is being addressed appropriately. And also with regard to all the projects, currently whatever the required extension and the required contractual, we are all basically for all the projects we are well within the contractual framework actually. So that is how it is being taken into the consideration. But from Q3 we are expecting that there will be a decent ramp up so far as the execution is concerned.
So can we reach a single high digit per day kind of a number, 7 to 10 crore in that range from 30? Because I would understand book 9,000 crores at least having a duration of 2.5 to 3 years. That implies almost 3,000 crores of annual run rate. or maybe about 7-8 crores of per day execution. So when do we see that number happening, sir? I mean, if you can give some realistic target there. So I'm not asking for the guidance for the full year, but I'm just asking when that number starts getting hit.
Realistically, I can say that in the Q3 we should be obviously closer to around between 7 to 8 crores. Obviously, Q4 it will be further incremental because as we know that the 3 of the projects, Surat Metro has already been started. So now we have started getting the revenue from the same this quarter itself, and even Q3 we will have the full-fledged revenue from that project. The other 2, Dholera, basically once we are awaiting the appointed date, once it is through, so definitely this will have the incremental addition. So, but our view is that we should be there within the range of between 7 to 8 crore in the Q3 and almost around 8 to 9 crore in the Q4.
Thank you very much. Sorry to interrupt, Mr. Kandapal. I'll request you to come back in the question queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Jiten Doshi from Axis Capital. Please go ahead.
Good evening, sir. Congratulations on the deal and thanks for taking my question. Sir, I have got a few bookkeeping questions initially. So can you give us the cash balance as in June, debtors balance and breakup of debtors, creditors, mobilization advances outstanding and retention money?
So far as cash balance in the system is concerned, we are lying there almost around 28 to 30 crore rupees there in the system as of June actually, right? And with regard to the debtors, the breakup is like this: the total is outstanding is book debt was around 400 crores, okay, and the all basically put together the work in progress and as well as the various the claim amount which we have already discussed during the last quarter, the numbers which we have shared in detail actually. Okay, so that all put together is some around 1,340 crores actually. So this is largely the number what I can share right now. And apart from that, the outstanding payment in the basically the creditors is to the tune of almost around 480 to 490 crore rupees. That is what we can say. And the outstanding mobilization advance basically in the current ongoing HAM and the other projects basically this is to the tune of around 375 to 380 crore rupees.
And retention money, sir?
Number upfront is not available, but I can just say I will send you the offline, no problem.
So on this debtors of 1,740 crores, so you said 1,340 for the claims and everything. How much is realizable this year from the claim, GST related or change of scope for escalation? So what are we targeting? How are we targeting to realize and bring it down for this year and by the end of this year, sir?
Actually, the first is obviously the payment related to the change of scope, certain GST payment which is now under the NHA is in the process of issuing the final circular. Okay, and that put together, I think we are expecting that should be completed before end of this year, before December itself, I can say. Okay, because that has been now we are chasing also with the authority on a regular basis. Apart from the realization of the awards, that as we have mentioned that this will also trigger the further addition. So in this year we are expecting that we should be in a position to realize almost around 250 to 300 crore or so actually out of the same. Apart from the other basically the remaining will be the ongoing and it will continue to churn.
Sir, on the guidance part, so now how are you seeing the next 9 months? So first 9 months I understand because of COVID and lockdown and restriction, labor unavailability, we end up making PAT loss. But Q2 also we are looking for a PAT loss, and H2 are we looking for a significant profit? How are we looking the next 9 months? Any guidance? And also for the FY23. In terms of revenue, EBITDA?
Because basically the impact of overall the execution ramp up will be we are seeing from the Q3 itself. Okay, so Q3 and Q4 we will see there will be some decent jump actually, and we will be again back at, as I have mentioned, the focus actually is to basically complete the balance, that is the monetization basically of the assets. and also to mitigate the strengthen the balance sheet, and also to basically augment the cushion in the working capital. That is what we are planning, and that we will be able to now complete as of now, because Ahmedabad Ring Road and 3M, we are almost at a certain stage of the discussion and closing. So we are expecting we should also complete at least.
So we can say safely that next 9 months we can get a similar revenue of around 1,400 crore what we achieved last year, something like that we can achieve. And again for FY23 we are looking for any big number of around 20. Because ordering
will have basically the decent growth actually as compared to H2 of the previous year, because the certain steps at site level has also been taken, and now basically as I have mentioned, basically the completion of these transactions will also help to basically further start the work actually, even basically to improve the execution within the H2.
So, order inflow, how much we are targeting? Any number like 2,000-4,000 crore, or still we are looking to?
The competitive intensity is very steep. I can say that in EPC, as of now, as I have mentioned, the bids for 5,900 crore has already been submitted. So we are awaiting the opening of the same. So we will continue to put the bid. Obviously, basically it spans and how the nature of projects are going forward, that is also very important. And as I have mentioned, that around 6,900 or basically are yet to be bidded before the end of this month. That is what the current status is.
So one last question, as you said that you are looking to get 550 crore to monetization of Maharashtra border checkpost, and around 550-600 crore to monetization of 4HAM plus Ahmedabad Ring Road, and are you also looking to divest your 2.5% stake in the Inside, which will give you almost 160 to 180 crore. So almost all put together, we are looking for a cash inflow of around 1,200-1,300 crore this year. So the utilization is will bring down. How you will bring down effectively you will use for your working capital, because working capital has been a pain point. Even Jodhpur Ring Road still it's almost 1.5 years we are not able to financially close the project. So what is stopping us for these things like that?
See, as I have mentioned, out of the proceeds, what you mentioned, that the 50% will be basically planned for the infusion in the working capital, and at least 50% will be utilized for the monetizing the asset. That is how the planning is being made.
And on the Jodhpur Ring Road, sir, when do we see the financial closure? Because it's been long now.
Ultimately, we have made the separate arrangement, and I think very soon we will be able to communicate that the problem of the entire Jodhpur Ring Road has been largely sorted out. Once the agreement is through, we will be able to give basically the comfort of the same. But I can say here that the Jodhpur Ring Road has been now no longer a challenge now for so far as group is concerned. And we will see the good execution even for the going forward henceforth in the Jodhpur Ring Road without basically affecting this. So that arrangement has been almost made. Once it is documented, we will be able to communicate.
Thank you very much. Sorry to interrupt you, sir. I'll request you to come back in the question queue. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations on the transaction. So first question was on the hybrid annuity portfolio. Just correct me if I'm wrong. I think initially the equity that we were supposed to infuse in these 9 hybrids used to be, the number used to be around 1,070, and you spoke about 1,200 odd crore rupees which is already invested. So does it mean the equity numbers have changed? And if you could link it to the fact that when I look at the CODs that you've been able to manage is not for the full length. So this 1,200 is essentially, if I were to kind of do it on proportion, where ideally it should have been even lower than 1,070, but then we've put in more than that. So if you could clarify on this, please.
And you see, ultimately, originally it was basically, as you mentioned, the number was somewhere around 1,070 odd actually. Post that, when we go for the reworking of the Sadbhav team projects, and because of that, in that project, the additional incremental equity requirement has been increased by, say, almost around 85 crore rupees. So that has already been infused now.
Okay.
Well, for Jodhpur Ring Road, we have also infused, because the arrangement, as I have mentioned something, because what we are planning, So some additional incremental equity has already been agreed by the company over and above which was already infused. So that has already been now completed. The commitment that matter has already been completed so far as the investment is concerned. So all put together has become now 1,200 crores.
Sure. Is there any clarity on de-scoping and de-linking? Because when I look at the COD or PCOD that you've been able to manage or recommended, it is lower than the total length. So what are the plans on the balance potential in terms of whether you will like to get these de-linked or you're fine with these? You're going to get it de-scoped?
See, actually in 3 of the projects, it is Nainital, Una and the BRT, there is a different de-scoping is already there. Okay, and say Una or when the NHA has already now recommended the PCOD, and we will officially get the communication before end of this month actually. So in this, the de-scoping and it has already been agreed into the settlement agreement itself. Similarly, in case of Nainital, the recommendation has been made accordingly, and that has also been considered. And this is the reason you can say that the PCOD for this Una has been approved by authority with effect from December 2019.
Sure.
See, earlier the land which was made available, we already completed the work. Because there are the certain land which may not be made available after so many effort by them, so that's why they have agreed. And also they have issued the PCOD with the past date, and also they are going to make the payment of the annuity basically for the previous period itself. And in BRD, it is almost out of 170. We are expecting some around 14 odd kilometers will be under the de-scoping.
Okay. And do you see any change in our order backlog because of this de-scoping with these three of these projects? And also, I think in your opening remarks you spoke about the 4 assets, hybrid annuity assets that you intend to monetize, and you will get to have around 550. So 3 I can fairly understand. These would be the projects wherein you already have COD in place. So which one would be the 4th one, Una or Bangalore in that list?
Many that we will basically update. This is mainly the Jodhpur actually. So as we have mentioned that once it is through, we will be able to convey that how basically it has been worked out. So that is what we have planned it actually. And what you have mentioned that because of the de-scoping, yes, in Nainital there will be some reduction in the basically the overall requirement, and to some extent rate will be reduced in that SPV. And particularly in BRT and Una it is there, but in couple of projects there is also positive variation. So that has also been added. So all put together, we don't see the much reduction in the basically this order book.
And just one last from my end, if you could help us with the NCLT status on the merger. When are we likely to have the merger go through and then have a combined entity with a stronger balance sheet relatively?
The process is already on, so we have already submitted the requisite approval we have already received. Just the last, basically we have received a small request from the consortium lenders, and just to honor that, so we have provided the relevant documents, and we are awaiting their final go-ahead. Once we will get it through, we will be able to complete the process, and in next hearing we will be able to take up for the final merger process.
Sure, sir. Thank you. I have 2 more. I'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital India Private Limited. Please go ahead.
Hello, good evening, sir. Thank you for taking my question. Nitin bhai, just wanted to confirm, you mentioned the debtor outstanding is 1740 crores, right?
Correct.
But at the end of March, it was, I think, something like 650 crores, right, sir?
Which one? How much?
At the end of March 2021.
What number you mentioned?
680, 690 crores.
No. See, actually it was 1753 crores.
At the end of March?
Yes.
Okay, so you are saying that the debtor number has remained stable on a quarter-on-quarter basis.
Small reduction is there actually, just.
Okay, I think there would be some classification thing that would have been gone in the balance sheet because of, I think, the retention money because of it. But otherwise, you are saying the debtor days, the debtor number is correct and there is no change in that number, right, sir?
Correct. Total.
And no delay in payment from any government bodies.
Not, but see, except certain, basically, as we have mentioned, the changing scope and GST, and for this particularly the awards which have already been received, only to that extent it has got delayed actually. Rest other things is understanding.
Okay. Right. So in terms of execution, if I were to ask you, I mean, it's a very broad level question. But in this quarter, of course, this was impacted by COVID, and so we could do only 260 crores of turnover. But sir, even in the past 3-4 quarters, even when the industry has completely recovered from COVID, the maximum that we could touch in third quarter was around 560 crores of turnover. So what is actually preventing us from doing better execution? We have the order book. Is it liquidity crunch? Are the funded or non-funded limits from our bankers, are they kind of basically fully exhausted, because of which we are not able to execute work? In Mumbai-Nagpur Expressway, sir, I think most of the other developers are talking about an early completion bonus, and we are executing only 30-35% right now. So just wanted to understand, where is the execution stuck for us? And it's not just this quarter. For many quarters, we have been basically reporting very low level of execution in terms of our order book. So where exactly is the problem, and how are we looking to get rid of it in the next 2 quarters? As you mentioned, from Q3 it should ramp up.
See, actually, there are 2-3 main reasons. Actually, I can say that the first 3 odd projects, as I have mentioned, the Surat Metro and this particularly this Dholera, the actually appointed date got delayed. And in Dholera, we are yet to get the appointed date for this almost 1,600 crore project. So this is one reason. Second thing, obviously, in the various HAM projects, and we are discussing in almost every quarter, that because of the various reasons, the land which has not been had available, it has got delayed. The finally UOT has been extended by the authority, and you can see the result that because of that, the authority is also now issuing the provisional completion certificate with at least 1.5 year back date actually. Almost in the majority of the 3 of the projects they have given like this actually. So this is also the one of the major reasons that basically it has also got down actually. So this is mainly, and apart from that, obviously, and because of that, when this has not, because the land is not made available, so definitely that basically the working capital also got stuck to a large extent in many of these projects, because all other steps has been taken by the company. Companies have basically procured the material, stocks is been lying at the site. So this is also being not moving as per the required manner. So this is the reason. Now the certain action, basically because certain de-scoping has been finalized, PCOD has been closed, the matter has been worked out, and also we have made the arrangement in such a way in number of projects, 3 or 4 projects in such a way that so we can focus more and more on the execution. So that's why we have told that we will be able to get from Q3 onwards, there will be a decent, basically, we are expecting that it will come basically on a little faster pace as compared to what we have seen in Q3 and Q4 last year actually. That is what we are seeing.
Okay, so great to hear that. So just lastly on the mining project.
Thank you. I'll request you to come back in the question queue. Thank you. The next question is from the line of Ritvik from One Up Financial Consultants. Please go ahead.
Hi, good evening, sir. So any
Ritvik, sorry to interrupt you. Can I request you to speak a little louder?
Yeah, hello. Can you hear me?
Yes, please.
Yeah. Sir, any timeline you would like to give on the merger? You mentioned that we are in the last leg, but any timelines that you would like to give?
Just actually the process has been, so far everything has been completed. The small request, because since it is a consortium lenders, and so we also want to basically go by their request. This is the main reason. Legally it is not required, but obviously when the request has came, so we have understood that let us take basically them on the board also. So I think maximum within say 3 to 4 months we should be through, so far as all the approval and the decision from the NCLT is concerned.
Okay, sure. Okay. So second question is on the claim status on Rohtak Panipat, and also the termination status for Rohtak Panipat and Rohtak Hisar. So have the NHAI accepted our termination letter, and what is the procedure, and what could be the best outcome for us from both these two projects, and also the what could be the best claim that we could receive on a realistic basis?
See, there are two things in Rohtak Panipat apart from this force majeure. See, this is a force majeure event which generally happens very rare actually, because more than 180 days toll has been suspended, so the NHAI obviously has to pay as per the concession agreement 100% of the debt due and 110% of the adjusted equity. That is what the concession agreement tells. Apart from that, the award what we have already received in our favor, that is a unanimous award, and also the claim pertaining to the previous period of the alternate route. So these all are under settlement as of now. So we are expecting that there should be decent settlement so far as Rohtak Panipat is concerned. In Rohtak Hisar, there is not such claim except for this the toll suspension period from 25th of December, because we have in SIPL consolidated, we have seen that the numbers are not, revenue numbers are not there, only the interest and the other cost is being already booked actually. So this entire loss we are going to claim from the NHAI apart from the termination payment as per the concession agreement.
Okay, so on a reasonable basis, is it fair to assume like over the next 1 year, the debt from both these projects would go out and you would receive some cash from the claims that we have put in, like 1,800 crores of debt is there cumulatively for both these projects. So, how long would it take for us to terminate these projects and get like complete exit from these projects?
See, now as per the concession agreement, once we issue the final termination notice, as we have issued in Rohtak Panipat, in Rohtak Hisar, we are expecting to submit on 25th of this month actually. So it is the fourth week. So it is as per the concession agreement, fourth week authority has to take over the possession of the road. Since the toll collection is not there, so we have already written them to you please take over the possession and pay us the basically as per the terms of the concession agreement. So obligation has already been started on the authority. So your first question is that regarding that the debt profile, yes, the date of both the SP will go out from the balance sheet of SIPL basically in this year itself actually. And also the claim proceeds and the awards, whatever will be settled finally, that will come to us in addition to the date what in the company. In Rohtak Hisar, I think there should not be any surplus actually in Rohtak Hisar, because there is no any such claim or award in our favor.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, you mentioned 50% of your inflows will be used for deleveraging the balance sheet. Now, so if I take SEL standalone and SIPL standalone together, about 1,700 crores of debt. So with the inflows, you expect at least 1,000 crores of the debt repayment over next maybe 9 months with arbitration cash inflow also to join in?
Yeah, see, if we see the total, the 550 is from this Maharashtra border checkpost. Again, 550 to 600 is from this Ahmedabad ring road and these HAM assets, which is already in there. So almost it makes almost around 1,100 crore. Apart from that, as we have mentioned, the 790 crores of the equity has already been infused, the remaining HAM assets. So that will also generate basically the value in the company, plus the 350 crores of the award, which is already in our favor. So all put together, the amount itself is very sufficient to cover actually. So according to us, even 50% we utilize, we will be able to reduce it by almost around say 800-900 crores basically to almost 1,000 crores closer to that.
Closer to 900 crores. So maybe if the debt amount is about 1,700 crores right now together, so we are looking at maybe 800 to 900 crores of debt level by year end, right?
And whatever the amount we will basically use for the working capital, that money will also be available within the system as a capital, working capital. So this will also be used for the churn up and for any growth. Basically, this money will be available within the group. So in nutshell, what we would like to say is that the complete plan of the managing the balance sheet that has already been taken off, it is in place. this one transaction has already been completed now. Another basically on the cards. And also basically to focus on the EPC, how basically we will be able to come back actually, and how we are planning to take basically the growth phase actually so far as the real execution is concerned. So that is also being planned along with this, the way the structure is. That's why we have described all the things in detail, including the date at SIPL and SEL.
Okay, understood. And understood this point. So you expect the interest cost at least to decline because your debt levels are expected to go down?
Obviously, from H2, basically the Q3, every quarter, there will be we are expecting a significant reduction in the finance cost actually, in the group level actually.
So from third quarter, say maybe 40, 42, 45 crores we are doing right now, maybe 30 crores is what from third quarter onwards is what that levels we are looking at?
Obviously, it will be gradually, but on a yearly basis, as we are planning that we are expecting to get it reduced by post completion of these 2 or 3 transactions as which has been lined up. So almost we are expecting to get it reduced by almost 100 crore in a year at the group level on a standalone basis. 90 to 100 crore.
90 to 100. Fair enough, understood. And my last question is on EBITDA margin. So how do you, like we have spoken earlier about 12% EBITDA margin on an average. So we continue to hold that?
Yes, we continue to hold that as we from Q3 onwards definitely, because the top line we could not achieve because of the various reasons actually, right? So once it will be again coming back to the say 500, 600, 700 run rate basically in the quarter, definitely and this we have also seen that in Q3, Q4 last year, it was already there actually within the same range.
Okay, I think that's about it. Thank you very much.
Thank you very much. Ladies and gentlemen, due to time constraint, that will be the last question for today. I will now hand the conference over to the management for closing comments.
So on behalf of Sadbhav Engineering and Sadbhav Infrastructure, we are very much thankful to all the participants for taking a valued time. Obviously, the phase, challenging phase was basically we have observed. But so far as the decision-making process and the basically implementation of the various basically the thoughts and the make it reality, that is already going on. And going forward, the focus is obviously is that we are in a process to complete the current obligation as fast as possible, and also we'll be planning in such a way that we will come back to the growth level. What was basically the company's original strength? That is what we are basically planning to come back. So that is from our side. Thank you very much. Thank you to Asian Market Securities again for the hosting this conference call.
Thank you very much. On behalf of Asian Market Securities Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.